Hello and welcome back to our marketing and sales processes. In this video, we're going to connect the ERP, the Enterprise Resource Planning System, and the underlying databases to generate reports and analytics. There are 9 features in an ERP system. So we have the marketing and sales features, and we have the collections as well. Then we have the business process that involves the CRM, the customer relationship management. Then we have the sales management and the financial, my favorite, the financial process as well. Database design. The data is leveraged and generated in a single business event of billing a customer, and that could span 4 different modules within the ERP. 1 being inventory, 2 being our customer relationship management, 3 sales, and 4 accounts receivable. Key features in an ERP system. So the entity relationships diagram of several ERP modules demonstrate how the blend of different departmental data needed is easier to maintain and acquired if we have an integrated ERP system. So here you see the customer table, and you see this as part of the customer relationships management aspect of the ERP system, but it does relate to accounts receivable and then also to sales and to the sales order. Reporting and insights. So the marketing, sales, and collection processes generate valuable data that is created and stored in databases. The accounting information system captures and processes this data, and the output can appear in sales reports or other data analytics, and that's the fun part about all of this. So here are some sales reports that might be generated. Historic sales, we might want to look at a summary of the inventory sold to customers. We might want to look at sales orders that are filled and, more importantly, that are open, or sales order aging, how long it takes us to fill those sales order, any back orders. This can also be important to see what customers have ordered but we can't fulfill yet. We might also have our customer master table. We might have other discrepancy reports or maybe non-invoiced shipments or missing documentations. Additionally, some of the more fun ones is our forecasts for predictive analytics or delivery timing, which basically tells us how long it took us to get the items to the customer, and maybe pricing decreases as well. We might also have increased order, where we are comparing decreasing prices with an increasing order quantity for specific customers, and obviously maintaining customer tables. So here is another. We might also look for duplicate customers, 3-way matching of invoices. This is what's heavily completed during audits, and KPIs, key performance indicators. Here we see a channel stuffing analytics that is presented in a dashboard to draw attention to specific suspicious activity, especially, as you can see here, based on returns. Then we might also look at revenue recognition reports, such as like customer revenue, the type of revenue per customer, revenue over time, revenue changes. Maybe we might look at a summary of revenue based on recognition or deferred revenue. And here we see a revenue recognition report in a dashboard format, and it's really convenient and easy to use, and you can see how much revenue we've recognized per month based on our goals, and then for each month, and total revenue recognized. So some of the revenue recognition analytics that we would do, we might do a revenue growth rate, a growth root cause, right, where we're comparing revenue growth to non-financial performance measures, maybe employees or square footage. We might do revenue costs, where we're comparing our total revenues to particular costs. Cutoff analysis, that helps us determine the timeliness of revenue recognition. And then we might have several cash collection reports. We might have a cash receipts journal, sales, outstanding balances, AR balances. This was one of my favorites. I would look at this probably daily as a CFO, maybe unusual account balances, and review the reconciliations. Additionally, we might look for unusual activity, might use ratios to compare maybe our net credit sales, also do some analysis on bad debt expense. We might also look at accounts receivable growth and do some invoice comparisons as well. We might look at the aged trial balance. Again, this is one of probably my favorites. I would look at this regularly, but nothing is better than an analysis of accounts receivable in a dashboard that could include metrics like aging summaries and comparing total sales invoices to paid invoices, or the top 5 customers by sales or amounts due. And so this concludes our lecture. Thank you so much for watching.